Welcome to week 138, and I wish I had some better news for you, but the Toronto's housing market has gone from bad to worse. I mean, some would say we're in a free fall, but not free for all, a free fall. But I don't necessarily agree with that statement across the board. Prices are dropping month over month, and there are fewer and fewer buyers entering the market every single week, every single month. So is this a good time to invest in real estate in Toronto? Or are there still risks involved? So let's take a closer look at that. Remember that while average sale price has decreased in some neighborhoods have seen bigger drops, some have seen really marginal decrease in price, and other neighborhoods are relatively unscathed. I mean, North Riverdale is one of those communities that I think I've talked about before, but they seem to be fairly well insulated from what's happening in the market overall. What was happening in markets like that, like North Riverdale or Roncesvalles, two really strong Toronto markets, is we were having like extreme big prices where you have like a basic semi-detached house sell for like $3 million. And stuff like that is not happening right now, obviously. But overall, really desirable detached homes in those big urban communities are still doing well despite the decrease in sales. But for the majority of the housing types in most of our urban communities, they have taken a serious hit, on some streets as little as like 8 or 9%, other streets as high as, up to 30%. And I don't know if you read that article in the Toronto Star this week. I've linked to it in the blog. It referenced a number of economists that had been interviewed, and all of them, the general consensus was that there would be a total 30% drop in real estate prices as we headed into 2023. But a lot of people took that as a 30 more percent on top of the drop that we've already had since February. But all of these numbers these economists are referring to were 30% off the high of February, of which some of which has already happened. So it's not a further 30% that they're accounting for, but a further drop nonetheless. And obviously you have to agree with the next interest rate announcement coming tomorrow. At first, it was thought that we would have 2 more quarter point or 25 basis point increases this year, but it looks like tomorrow we will have another 75 basis point increase. And hopefully we're surprised with a smaller one, but I don't think so. As long as the US Fed is being as aggressive as they are, you can expect the Canadian government to continue to be as aggressive. But we'll see if that changes going into 2023. This could be the first time that the Canadian government goes against what the US Fed is doing. That's never happened before, but we'll see. Right now, we expect the 75 basis point increase tomorrow, which will further remove some buyers from the marketplace. But again, just like before every other increase, you have a window of about 90 days where people have locked in pre-approvals that they're trying to use up before it expires. So there is not like the increase tomorrow doesn't necessarily reflect what's going to happen in the market the day after. It's really a 3-month or so window that you're looking at where people are actually affected in the pocketbook. And of course, folks that are on adjustable rate mortgages, which have fluctuating payments, versus variable mortgages, which are usually on fixed payments, regardless of what the rate is. But we've all heard of that term trigger rate, which has triggered some higher payments in some scenarios. So, not the brightest news for the remainder of this year. But that being said, we had a client just today pick up a detached bungalow within a 5-minute walk to Coxwell subway station near the Danforth for under $800,000. This property, this almost identical property, traded for just over $1.3 million in February. This is not a habitable place. This is a home that was inhabited by the same people for 60 years and is going to be developed into something much larger down the road. So there is still, in my opinion, tremendous opportunity for developers and investors to pick up sites like this that will take up to, say, 18 months to redevelop. You can ride out what's happening in the market, but get a phenomenal purchase price and sell when the market swings up or rent it out down the road. I really think there's a great opportunity for developers right now. So digging into the blog, I'll show you what I've been working on here. Down into the numbers. Oh, right. So here's that Star article that I was talking about. If you don't have the paywall, if you don't have the Toronto Star subscription, send me an email and I'll send you a full copy without the paywall of this article. And another thing that people are doing here, and this article references it as well, is comparing what happened in the 80s into the 90s with the recession and the almost decade it took to pull out of that recession before. As you know, in 2022, things move a lot faster than they did back in the 80s and the 90s. So the expectation is that we will pull out of this recession. And if anybody thinks we're not headed into a recession, they need to get their heads checked. Obviously, we're heading into a recession. We're in one right now. We will pull out of this quicker than we have in past recessions, mainly because economies move a lot faster in 2022 and beyond for obvious reasons. So, like I said before, it is not a 30% drop from today that's being predicted. It's a 30% drop off the high. And like I said, in some communities, especially the rural ones, that has already happened. Toronto condos, Toronto houses, especially urban Toronto houses, urban Toronto condos have been less affected, but affected nonetheless. So buyers are still seeing some big discounts off the highs there. So if you are a buyer in the market and you're not so worried about what might happen in the next year or so, there still is a great opportunity to jump in without any real competition out there and to save a whole bunch of money on that purchase. But like I said, when we're heading into a recession, it's really important to hold some money back, be ready for things to get more expensive. So do not max out on that purchase. But again, we're not day traders of real estate here. So you really have to shed that day trader mentality and understand that the house that you buy today might be worth less next month, but long term, you're going to be laughing all the way to the bank when you go to refinance that property to make other investments or whatever it is you want to do down the road. So, and this was all sparked by a friend of mine on Instagram asking me what I thought about that article, and I was hopefully able to clear that up for her. So looking at the number of houses that are available for sale, if you've been following this blog, you know that it's been kind of sitting around this 530 unit mark for a very long time. Even with this depressed sales activity of only 56 sales in 1 week, and thank goodness that's up from that abysmal 32 units that were sold the week prior. That had me worried a little bit. If we had another week of only 32 houses selling in this market, we would have been in a serious situation with literally nobody there to buy any of the houses that are listed. But this is a testament to the Toronto seller. We do not have any panic sellers out there, once again proven this week with no new real listings being added to the market with so few sales. And regardless of where the market is right now, let's make no mistake. I mean, we have these 56 sales all selling with an average days on market of under 17 days, an average price only slightly being affected with median moving up this week as well. So it is slow, incredibly slow, but it's not the terrible, dreadful market that everybody thinks it is out there. If you have a correctly priced property that's marketed well, it is still going to sell. But, the recommendation is that you're not going to market right now unless you need to make a move up, because like we've said, week over week, move up. Buyers have a great opportunity right now to save a bunch of money on that purchase. But shifting into condos, you'll notice that it's also remained relatively stable with slight movement in average and median this week. But again, we're up a bit in terms of active listings, but nothing really significant here. We've been going above 1,600 and coming below 1,600 regularly for the past 3 months. And sales are up for condos this week as well, which is really, really encouraging to see. At 74 sales. But again, we're at about 220 normally. So we're at 74 right now. Not a great week of sales, but way better than the prior week. And I guess having that shortened week from Thanksgiving really did affect things quite a bit. And I really didn't take that into account last week. I didn't think that 1 day off was going to affect sales that much, to the tune of almost 30%, but it seemed to. And condos here also trading for under, around 20 days overall, which is still a pretty healthy process there. And like I said before, some areas have indeed dropped 30 and some are flat. And this is how I answered my friend. We kind of went through that already before, but I really encourage you to read this blog because there's a lot of new information in here that I haven't really talked about before. So going on here, we've got that detached bungalow that I talked about. But is that a big enough deal for you? Right now, there's a lot of people that were out there that are talking about they're waiting for the market to come down so they can take advantage of the market. They're waiting for it to hit a certain price so they can take advantage of the market. So if I told you that a house in February was selling for around $1.3 million and you can pick that house up for around $800,000 today, is that a big enough deal for you? What's enough to get you to put pen to paper and write a check? Because to me, that's a phenomenal deal. And as you know, when you're a real estate investor, you don't make your money on the sell, you make it on the buy. That's why it's really, really important to make sure you're getting that price down to where you really need it to be. And, we talked about this again already with the 80s and 90s being a very, very different, different time. But the main message I want to get across is the same message that I was getting across when COVID first began. This is not the time to panic sell because you're worried about what's going to happen next year. If you have a pre-construction condo that closes in the next 2, 3, 4 years, you need to keep that condo. You need to not sell that assignment right now. The only assignments that are selling right now are even below your original purchase price, believe it or not. You're actually writing a check to the assignee to take that off your hands. That is not necessary. You've got plenty of time to ride out the market if you're beyond 2 years out. So now is a really important time to build and expand your investment portfolio. Build when other people are fearful. Right now, all of the wealthiest people that I know, or the people that are on a path to extreme wealth, are doing a lot of value buying. Like my client that I told you about that picked up that home. So again, you have to make sure your finances can handle it. You have to make sure you're using money that you don't need immediately, because this money is going to be tied up for the next 18 months while you build that asset, while you build that property, so you can flip it or you can rent it out. But there are some phenomenal opportunities right now, even in cottage country, where you think people are going to be selling their houses in Toronto or their cottages first if they're feeling financially strained. They're probably going to be selling their cottages. So if you're an investor, give me a shout. I'll connect you with our cottage experts just to see what kind of deals are on the table. Like just this afternoon, I saw a 3-acre parcel with over 200 feet of beachfront for under $800,000 there as well. So these properties would have all been flying back in the first quarter of this year, but now there is some incredible opportunity there. So looking through all the neighborhoods, everybody is pretty much maintaining their active listings at around the same level for the past 3 months now. Sales not fluctuating too much with the exception of last week, which is a little bit alarming. So in this blog, I'm constantly driving home that message that if you're a property owner, you need to hang tight. It's a tough market out there, but we don't give into panic selling. It's just not something that we do in the Toronto market. So keeping it relatively short this week, I think that's all I pretty much have to say. Let me get this screen off here so you can see my face again. How do I do that? There we are. So lots of big changes coming with the team this week. Week 138 is a wrap. Week 139, maybe I'll do something special for week 140. It's, round numbers. I like them. So comment below. I want to have some respectful discussion here on YouTube or anywhere else that you're reading this. And don't forget to subscribe. I'll put the subscribe link to the blog in the comments. And if you're not already a YouTube subscriber, please do so. This November, I'm doing a challenge, 1 video per day. I'm going to do my best to deliver some high value content this November. Thanks so much for your subscription and your attention. Have a great day.